Today's market call is presented by FactSet, financial data and analytics powered by tomorrow.
Tuesday, June 3rd, 11 a.m. The month is flying by. Guy Adami, Dan Nathan, joined by Guy Adami and Dan Nathan. And any of the questions that you want to send us, Amanda is great. By the way, Dan, how are you?
I'm doing great. Baby Lola is in the house. I just got a picture of baby
She's
Lola
with you right now
on Thursday. No, Amanda
Oh.
keeps sending me. And she's got baby Cece too. These are two kids that are very tight together. Very happy for her. She's going to be very busy for a while. I'm sure in a few weeks when she comes back to us, Guy, she will be excited.
More than a few weeks, people.
Oh, really?
If Amanda can take as much time as she wants if she's watching or listening right now. She can
I
come
bet
back
she is, by the way. Do you know Amanda keeps CNBC going in the background all day long, which I think is pretty amazing. She probably doesn't watch Fast Money, but she does all day long.
Well, so I'm sure she watches the noon show, the HTR with the SDs, which is my favorite show.
So, Guy, we started out yesterday's fine program. That would be a market call with, I guess you can't keep a good market down. That's what we said yesterday. There were reasons, I think, for investors to have a little trepidation. That was yesterday. The trade stuff keeps going, and it doesn't go, in my opinion, in the right direction. This morning, the headline was of the OECD. I had to Google it to see what that meant, guys. The
Office of
Organization of. Go ahead.
Organization of Cannabis Directors. I have no idea.
Close. Economic Cooperation and Development. That is the OECD. And so you better remember that for CNBC's Fast Money later today.
It's going to come up.
It might do. Listen, we're going to take questions, right? We're going to talk about this. We're going to go through some upgrades, some downgrades, some interesting stuff going on the single stock front. But let's start here because this is the sort of headline which, if you don't know what the OECD is and the warnings that they're going to give about growth and the like here, you might just gloss over it. But this is the sort of headline that I saw on CNBC.com, Bloomberg.com, WallStreetJournal.com that kind of led the commentary for today's price action. But here we are. And listen, I don't think either one of us are just like rooting for us to go back to the April lows or whatever. But it seems like right now that the markets, as panicked as folks were 2 months ago, they are that complacent right now. And I think the disconnect here is that, fine, maybe the worst case scenarios have been taken off the table, but there's a scenario where the OECD sees, and many other folks that track this sort of stuff, where a protracted bear market, or a protracted trade war likely to weigh on our growth, but then global growth.
We had Steve Eisman on Fast Money last night, and his only real concern about the market, we talked about a number of things. He didn't think he didn't think the concerns that Jamie Dimon had were warranted at all. He actually, called it sort of the economic version of virtue signaling, worrying about the debt and those types of things. And, he just didn't seem to be at all concerned about that. But what he was concerned about, and why the reasons he's not fully invested and sort of somewhat apprehensive, is because of what you just talked about, sort of the unknowns around that. And you said the worst might be off the table, and you may be right. It's hard to say, but there is a worst case scenario where it gets into a full-throated trade war where both sides start to dig in, and some of the rhetoric suggests there's a chance of that happening. But to your point, I don't think anybody necessarily wants it to happen. And Courtney Reagan did a great piece this morning. I'm sure she'll be on at some point again during the day, talking about the impact of the tariffs at different levels and what it means to prices. And she used the example of a men's cotton sweater made in China. And it's just interesting to see how the numbers sort of work out. So, look, that's out there, but you just use the word complacency. And again, to mention Jamie Dimon, and that's a word he's been using over and over again. And one of his primary concerns is exactly that, the level of complacency that's made it into the market against a backdrop where nobody really should be all that complacent.
Yeah, I mean, but that's just how market sentiment goes, right? Like when everybody is panicking, then you can't kind of see a bottom. That's panicking to the downside. And then when everyone feels like, we're out of the woods here, it often goes the other way. One of the things, I just want to kind of run through a few charts and kind of create some sort of narrative about what might be, a sort of perception that for whatever reason, U.S. investors have not embraced yet. Okay, so let's pull up the SPY, the ETF that tracks the S&P 500. Okay, so we had that V reversal. We had that gap, right? You see that above the 200-day moving average. This the ETF or the market has not violated that gap or that 200-day. And if you look at that and you say that consolidation, it looks like it's getting ready to make a move towards those prior highs. We are 5% above the April 2nd Liberation Day levels. Okay, fine. Carter, charted this for us yesterday, going back, 1 year, 5 years, 40 years, 50 years. Was. He said we are a bit at a standstill, pair of twos. All right, let's flash forward now, Guy. So if you think about who we came after first in this trade war, it was Canada, Mexico, and the EU, and then obviously China. But we actually went after everybody, all 180 countries. All right, so this is the ETF that tracks. This is the IEV that tracks the EU. Look how well above April 2nd it is right here. Okay, now let's go to Canada, EWC. Okay, look at that thing. That's not one I look at too frequently, Guy, but not only did it take out its all-time highs, but it has gone on a rampage higher. Okay, now let's look at EWW, which is Mexico. Still not above its highs, right, from 52 but look at the outperformance we are seeing in the EU, in Canada, and in Mexico. That's saying something about where the risks are, in my opinion. Only if you care about through the lens of the stock market, but that is a voting machine, would you agree, by investors?
No, I think you're right to point it out. And, picture's worth 1,000 words, as they say. And what it speaks to is the outperformance, number one, but, the reluctance, or maybe not reluctance, but people moving away from, the U.S. centric assets, be it our dollar, our bond market, or our equity market. Now, our equity market is bounced, as you just said, but not nearly to the extent as some of these things. And I think that speaks to, what we've been talking about for a while. There are a lot of people out there that maybe not necessarily shorting the U.S., but have found other places to be, which, it's not effectively shorting it, but obviously it takes some buying power away, and the performance speaks to exactly that. But the fact that, global stock markets are seemingly doing as well as they are against this backdrop is, a little bit perplexing to me. It leaves you scratching your head without question. But, here we are. And I won't use that term, what the market climbs, because it makes me want to scream. But that's effectively what's going on right now.
I don't know what you're talking about. What is it?
I'm not going to say it. You're not going to make me say it. One of the listeners said, no, I won't say it.
You were on the cusp of making an amazing point about the markets relative to other global markets, and you said something very specific about the U.S. And
I won't say it. I just won't say it.
The market is climbing a wall of
yes.
That's what you meant.
That's one of those things that when I hear it, I want to throw things at the screen. You can understand, by the way, you ever watch these videos on the YouTube? Apparently people watch this YouTube. I don't understand it, but people, that's the way they get their content is on YouTube. By the way, we have a great YouTube channel, so I want folks to continue to do that. But there's so many videos of people watching like their favorite football team. And I'm not talking about American football. I'm talking about like the soccer. And if somebody scores a penalty shot, they throw something at the screen, or they rip their TV off the wall and throw it down. I don't understand that. But listen,
why waste
fandom?
Why waste a
they're wearing their Arsenal jersey, drinking their Guinness, and then one of the other strikers scores a goal against them, and they're all sort of exorcised. Sorry about that.
No problem.
Back to you.
Really quickly, so just on the point about complacency, let's pull up the VIX, because this is one thing you'd say, oh, VIX is at 18. The average in the VIX over the last whatever year has been 15 or 15 and a half. You've had those spikes here, and this is not this is the VIX. But I just want to make the point is that as the S&P is moving back towards those prior highs, the VIX is moving back towards the that kind of mid-teens sort of level, which also speaks to a level of complacency. And I just think that's kind of worth highlighting. And to your point, if you think that there's this global move for investors to be selling U.S. assets, you might think that the VIX would stay elevated because it's not just the dollar, it's not just U.S. treasuries, right? It's also selling of the U.S. stocks, because if you think about that carry trade, right, that was going on, that gets unwound in August, got one unwound in April, that's one of the reasons it was an accelerant to selling the biggest stocks in our market, because folks were, kind of selling risk assets overseas, you know what I mean, lower yielding ones, and buying higher yielding ones or higher performing ones. That's the unwind, right? Now, I can't remember who we were talking to, maybe Mike Wilson a week or two ago, saying that trade is fully back on, you know what I mean? The carry trade here. So that has the potential protracted trade war. Curveballs come in, and then you have this level of complacency in some of the most volatile assets in the world. And it's been proven that way over the last year or so. That's how you get this kind of crazy disconnect price action.
I think listen, that's exactly right. And, in the absence of anything catastrophic, the market levitates, and it does so on the back of a number of different things, not least of which this, we hammer it home, but it's an important topic, this passive investing theme that's really taken off over the last 6 or 7 years. And that is something, by the way, that typically doesn't care about any of the things that we talk about at all. I mean, it looks past valuation, looks past just about anything until there's some sort of event when passive becomes active. And I think we saw that in spades last August. We obviously saw it earlier in April. But most of the time, the other 96% of the time, you have days like today where, the market just does its thing. It does its levitation, seemingly on the back of nothing. But, that's the environment that we have found ourselves in for quite some time.
Yeah. Let's pull up. This is a call a day here, guy. Let's kind of
love calls of the day.
Let's move to single stock land.
By the way, I had one of the first Pinterest pages in the history of Pinterest.
By the way, maybe Jacob can find that Pinterest.
I'm sure he can. It's one of the most watched or viewed pages on Pinterest.
You have been an adamant bull. I just want to say this for a very long time. Maybe
but it had a huge downdraft earlier this year. So
it did.
But anyway,
Let's pull up the chart before we go to the bullets here, because I think to your point, it's like this is one of those companies that has, I don't know how great the visibility is that they have into their own business. Obviously, a big part of their, their business is ad supported, right? They're moving more into e-commerce, and you just see some of those big moves. To your point, there's some big gaps, and those are all around earnings. And, you go one quarter, you have a gap down, one quarter, you have a gap up, the next one, that's kind of one of those sorts of things. Like just in the last 6 quarters. Okay. You ready for this? So after last quarter, the stock was up 5%. The quarter before that, it was up 19%. The quarter before that, it was down 14%, then down 14%, then up 21%, then down 10%, then up 19%. I mean, to have that sort of movement post earnings tells you that either the company is really bad at forecasting, right? Or investors just get overly geeked up at one point and then overly, bared up. And that's how you have these big moves. And that's a really hard place to be, I think, as an investor, a story that you might think is a great long-term play, but in the near term, it's making it really hard to own it.
I think they had some activist investors in a couple of years ago that made some pretty salient points about Pinterest, probably some of the same points you've made over the last couple of years. Now, to your point, I mean, peaks and troughs without question. And look, if you go back 3 or 4 years, I mean, this is a stock that's been basically, I want to say sideways-ish since, I don't know, late 2021 or something. I mean, we've been sort of mired in this 28 to 35-ish range. And to your point, I mean, we've seen these moves up and down, but it's all much ado about nothing when you get down to it, because at $33, we're probably the same price we were 3 years ago. So the question is, on the back of this upgrade, with I think the price target was raised to $40 by JP Morgan. $40 gets you to levels that you haven't seen in quite some time. So if you get to 40, I think you've broken, in my opinion, this long-term sort of sideways action, and we might be setting up for a new move higher. So risk reward for pins is favorable. I agree with that. We've thought that for a while. I think the average price target is around $40 or so on the street. I think the high on the street is 50. Yeah, I think Pinterest is okay on the long side here, but I've thought that for a while, correctly and incorrectly.
Yeah, I think one of the big parts of this story is the press into e-commerce a bit more. Like I think that's something I talked about on the last call. So this is one where JP Morgan was obviously not in the consensus here. You look at just there's 35 buys, 7 holds, 1 sell. Not that we really care a whole heck of a lot about analyst ratings, but it's interesting from a sentiment perspective. The stock is up on it today, given solid execution, potential upside estimates, and what we believe remains lukewarm market positioning. We view the risk reward on pins as favorable. Okay. By the way, Aneth is a really good analyst. I like him. I've known him for a while over at JP Morgan. So interesting stuff. I mean, the one thing I'll just say, and this goes back to your climbing of wall of whatever you said, our good friend Doug Cass over there at thestreetpro.com. He's also Seabreeze Capital. I think he did this. He sent this over just to really get you fired up. Here's a tweet from Cliff Asness, a comment on Bloomberg TV. Can you read that here? Do you want me to read it for you guys?
I'll read it. Okay, you know what really bothers me? The phrase "money on the sidelines." Oh man.
Oh no.
Yeah, that is one of the lazier. It's just something people throw out there when they're trying to sort of end the bull thesis. It typically ends with a bunch of whatever superlatives, and then by the way, all this money on the sideline, waiting to be sort of put to work.
Well, can I just tell you this? The money on the sidelines with a 4.43 10-year, a 5%-ish 2-year, and an S&P that's been very volatile and is unchanged on the year, probably not a bad place to be if you think we're about to go into a protracted trade war, going back to what the OECD was saying today, Guy. And
it's not the OECD.
It's not some Bitcoin trust. This is the Organization of Economic Development. Okay. Those guys, they're probably some of the sharpest economists that you could find, you know what I mean? And maybe they, maybe on the one hand, they believe this, and on the other hand, they believe this.
One dog's looking one way. Yeah, I know. Well, listen,
you
learn something on this show. See, I'm not only a participant, but I'm a viewer as well. You learn. You always have to learn every single day.
So I was at an Italian sandwich shop over the weekend with an Italian.
We just call that a sandwich shop.
You would call that, but as a Hebrew, I would call that an Italian. Right. When you're in Cats, you don't say a Jew. I don't say Jewish deli. I just say deli.
Right? That's a deli. Delicatessen.
Okay. But you wouldn't say. So
did you get a wedge?
No, that's what you call it up in Croton on the Hudson.
Yeah,
where I went to school in Philly, we called it a hoagie. A hoagie. All right, really quickly. So in this Italian sandwich shop, which you would just call a sandwich shop, they had a TV, like a little, TV right on the counter, and it was playing. And this woman in front of me, who just never looks like she watched them out, she goes, "What is that, casino?" And I said, "Listen, lady, that's Goodfellas here." You know what I mean? And she's like, "Well, I had a good shot." I was like, "You did have a good shot, but you should know that that's Goodfellas." You're green. Right. On a scale of 1 to Goodfellas, casino's like a 4.
Well, I pushed back a little bit on that. I thought Casino was, I like Casino. I thought Sharon Stone was good. I thought James Woods sort of overacted a little bit. I loved De Niro in pretty much everything. And then you throw like a Don Rickles in there, and it's like, man, oh man, what's going on?
Don Rickles was a really interesting call. And that movie's 30 years old, isn't it?
Which is amazing. You're probably right. But I think that is aged pretty well. I mean, and it's based on, somewhat of a true story. So big Casino fan.
As was Goodfellas,
Yeah.
Movie
the Lufthansa heist. It's funny. I sort of remember, as kids, you used to listen to the radio.
Yeah.
That's what we used to do because we didn't have televisions. And I remember hearing about the Lufthansa heist on 10-10 wins. I'm like, what the hell is that?
Who else heard about it? Hold on. You know who else heard about it on 10?
Ray Liotta. He was in the shower.
Henry Hill. He's in the shower listening to the radio.
It screams.
In a parallel universe,
Jimmy. Yeah, I know.
You could have been Henry Hill. I'm just saying.
No.
Really?
Because I wouldn't have ratted. I wouldn't have ratted on people.
No, I know.
Henry. Listen, Henry and Henry was. He was doing shit he shouldn't have been doing.
Yeah, but by the way. He got into the
job. Sorvino told him, don't turn me into a jerk.
But you wouldn't have been Henry either, or you wouldn't have been Jimmy because you would not have been.
Well, I wouldn't have been Jimmy because he's Irish. I mean, come on.
Well, he was also the Irishman. The Irishman. That's where I was going to go next. That movie sucked. Like that.
I
that
didn't
was
see
bad.
that. You know,
Yeah.
every once in a while I want to watch it. Then I see it's 3 hours long, and
You
I'm
know
like,
what my review of that movie was? Don't bother. Just watch Goodfellas for the 50th time. That was my review.
that,
of
you know what? That's fair.
That's not bad. All right. Let's
De
move on.
Niro's in another movie where he plays like 2 different roles.
Oh yeah, I think it was Jimmy Hoffa. Was it the Hoffa one? Or
No. It's out now, I think.
Oh, okay.
Sorry about that.
Sorry about that, people. We could, supposedly Siskel and Ebert hated each other. You know that?
Is that right?
Yeah, supposedly. Good.
You wouldn't know.
Well, but you and I could maybe do that. We kind of have a
Review
narrow
films?
sort of lane.
Well, no, I think we'd be good because we have a much, I think we have like that concentric circle of some movies, but then we're sort of, I go one way, you go the other way.
Well, what do you want from me?
It's
All
like our
right.
musical taste. I mean, Amanda's not here, so she can't yell at me, but you got to see Dan on the set of Fast Money. Sometimes he's very happy with the music. Other times he's apoplectic. Yeah. Like when the 70s soft rock stuff comes on and he looks at me like, you guys, this is on your playlist. I'm like, yeah, I don't hide from it.
It's shocking.
I have more Miley Cyrus songs on my playlist than I have Metallica songs.
It's embarrassing. And oh, by the way, your yacht rock section of your playlist,
fantastic.
It's nauseating. All right, let's move on from Pinterest for a second. Here's another ad.
Bill there. Oh, Bill's in Ireland or something.
Yeah, he's in Ireland. Another ad supported model.
Maybe he's trying to figure out how to be funny.
Right. I went to his show the other night. He is funny. So this is a story went public last year. Its company's been around for 20 years. And right before the IPO, they did some deal with Google so that Google, for training of their Gemini model, they just paid them, for access to their data, plugged in an API. And this thing, that gap that you see last fall reflected that revenue that they got, which, so this thing became a meme stock. And what's interesting, Guy, about this, it filled in that entire gap, right? So it went
That's right. In early April, filled that gap in from November. Yep.
And it really hasn't gotten going again, which I think is interesting. Now, let's go to CoreWeave for a second, because CoreWeave now, this is one
ridiculous. We talked about it last night. It's nuts.
Oh, you did on Fast Money? I mean,
Listen,
I couldn't be more wrong, obviously. And if you move that,
to stop for a second, you talked before this went public. You talked about how insiders right? They were selling stock or whatever it's called pre-IPO, hand over fist, and there were reasonable reasons to be concerned. And by the way, it sort of played out early on, but now this thing is just out of control. And I think it's like a 32% short interest in the stock.
Yeah, I mean, and listen, so you could say, oh, the smart money is short the stock because they think it's a big fugazi, and it might be, but in the near term, if you're short right here, and again, we don't advocate by any means, retail investors to short stocks, because when professionals do it, and I'm not trying to say that professionals are better than the retail. What I'm saying is oftentimes if you're at a hedge fund, you're running what's called a low net, right? Like net exposure. So, there's very few just short funds out there, right? So if you're long, predominantly based, biased to be long, you're going to try to find shorts on the other side of it. This one doesn't fit into a good bucket if you think about it, right? Because there's not too many comps. It's got a very small float, right? There's probably a concentration of holders, and a lot of folks are betting against it. So if this is one of your shorts against maybe a Dell and super micro long or something like that, you're getting your balls blown in. You know what I mean? So we're not fans of outright shorting stocks. You and I have seen this. This stock could double from here in a month. And while it would be disgusting, we've seen it before.
100% have seen it before. As much as you want to sort of understand short interest and say, that is the smart money, you got to wait for those people to be squeezed, and you're going to see, I don't know if you have volume in front of you, what it typically trades and what it potentially is trading today, but you're looking for a day where it may trade 7 or 8 times normal volume, maybe make a new all-time high, and then maybe reverse and actually close lower. You really haven't seen that type of day. It looked like you saw one, 4 or 5 trading sessions ago, but then it just got right back on its horse. So stay tuned for that, I guess.
Yeah, the last thing I'll just say is on the revenue front, I mean, this company is expected to grow sales. Just to give you a sense of last year, they did $2 billion in sales. This year expected to be $5 billion. Definitely second half loaded guy as far as revenues, and maybe that CapEx that we heard from a lot of their big customers is kind of the reason why this thing is going. And then from $5 billion this year to expected 11.5 next. If that's the case, then fine, have a ball here, people. But this company is also expected to lose money next year, right? So on a expected $5 billion in revenue this year, they're expected to lose nearly $1 billion and $500 million next year on 11.5. So again, this is trading on a revenue multiple. And if you don't think there's going to be a digestion phase of this data center build out at some point, I know I've been saying it for a year or so, and it really felt like coming into this year when you saw what happened in DeepSeek, and then you saw this kind of hyperscaler move to the downside, including NVIDIA, which nearly got cut in half. By the way, you know what I'm saying? That seemed to be a sort of prevalent thought process. So if it isn't happening in calendar 2025, it's going to happen at some point. And this is a stock that's going to get cut in half. The question is, does it get cut in half from $100 higher, or is it from these levels?
Agreed. And it's one of those things that we're going to talk about more. But to your point, what is it, about a $70 billion company? So if they can actually get to that 11 or $12 billion of revenue, I mean, price to revenue is not obscene, but your also point is well taken that it's still a money losing operation right now despite that revenue growth. So it's worth watching. We have a lot of questions about energy and Constellation Energy, and it's good that we do, because we actually have a slide for Constellation Energy, because we're thinking we're thinking ahead of you folks. So up huge today on this Facebook nuclear power deal. We've seen headlines like this before. The questions are, what do we do here? What I'll tell you is, we're right back to levels that we saw earlier in the year. It seems logical to me, again, if you've been sort of owning the stock, and it's doubled. I want to say it's doubled since the April low. I think I'm right about that. You got to move. Again, we use the term all the time, move your feet. Well, this is one you got to move your feet, because these stocks have ebbs and flows. Now, if you say to me, Guy, I believe in the secular growth story and it's a sea change, okay, that's fine. And, you can stomach the downturns, but we're right. We traded up today, I think, to 342-ish or so. I think the prior high in January was about 352. You got to watch this thing real close today, because if it closes on the lows, which, we'll see, keep your eyes open there, folks.
Yeah,
I'm just throwing it out there.
So Constellation's got this nuclear plant in Illinois. They basically bought out all the capacity for the next 20 years. I want to read this. This is from the Financial Times guy. This is really funny. Meta's rivals, Amazon, Google, Microsoft, had all struck deals with nuclear power plant operators recently, but plans by the social platform for a similar deal last year were upended by environmental and regulatory challenges, the Financial Times reported. Among them, Zuckerberg told staff that discovery of rare bee species, a rare bee species on location next to the power plant where a potential data center was to be built, had complicated the project. I mean, I don't even know what to make of that. You know what I mean? Like Zuckerberg, and this is a guy who's done an absolute about face on probably everything that he believes in the world over the last few years or so. And I just think it's interesting that they use the term environmental and regulatory challenges. This is one reason why so many folks like Zuckerberg, they don't want to be impeded by things like environmental regulations or this and that, or whatever. And they just, the worm turned, baby. So I just think that was really interesting. So one last thing on this guy, look at the overlay of Constellation over the last year.
Yeah.
Steve built this versus Meta, pretty correlated, right? Like, so this trade, the nuclear trade, has everything to do with the hyperscalers. And if they don't, so yeah, that's that.
No, I mean, there are other names. And listen, yes, 100%. I mean, I want to say Vistra Energy, which is a name I don't think I ever uttered in my life in the 18 or so years. And there was a good reason why, because the stock was a nothing burger, another phrase that I hate, forever. And then look what happened in late 2024. The thing all of a sudden caught wind of this whole AI trade. It's been off to the races. I mean, a stock that spent most of its time in the mid 30s traded up to, I think, 180 or something, or 199, traded back down, and now it's back on its horse. So just to sort of dovetail that Constellation theme, I mean, it's happening all over the space, seemingly. Real quick, we got a question about solar. I think it's from Wavy McFly. Wavy's with us every day. So let's take a look at First Solar. And he says, Do you think the worst is over? Well, I pulled First Solar up, and I'm looking at, we just traded down the levels that we just saw in November of 2023. If Stephen wants to put like a 5-year chart. And this prior support was support yet again. And by the way, the level of support was resistance a couple of years prior. So you can draw a horizontal line across those bottoms and tops right around that recent low, and you'll see what I'm looking at here, Dan. So do I think the worst is over? Well, it might be, yeah, right there. So you can see what I'm looking at. Now, that is not exact. None of this is an exact science, but you see what I'm looking at, right, Dan?
Yeah, 100% from a technical standpoint. I just say this is going to be a battleground fought in this trade war. I think the Chinese basically are like massive suppliers of the cells that go into these panels and the like, and the rare earth materials that go into them too. So this is one where, you haven't seen participation in this rally over the course of this, trade sort of, dust up. And so I expect it to kind of underperform. So to your point about the technical levels, keep an eye on that, because if it breaks down, I think this is probably also a name that has a lot of short interest. So Guy, you just used the expression, the worst over ? Dollar General. You've been tracking this name because you thought it was a good read on a consumer that is likely to be strapped in a slowing economic environment, maybe with rising unemployment. This last line, I think, is really important, because this is something throughout like the bear market in 2022 and the slowdown post-COVID, we kept on hearing this from Walmart. The retailers attracting more middle and upper income customers seeking value. Now, if you go into a Dollar General, it doesn't look like Walmart, Guy. Is that fair to say?
No, fair.
The inventory is it's
scattered.
Scattered. It's all over the place. When you go into a Walmart, you can take it to the bank. You know what I mean? There's obviously predominantly staples. There's definitely plenty of discretionary things. But when you go there, you know what you're going for. Dollar General is less so. So when you hear or see that sort of headline, it should cause you to rethink what's going on with the U.S. consumer on all different levels.
100%. And listen, the theme that we've talked about for a while, and as many things as I get wrong, and there's a freaking laundry list. I mean, this is one that we got right, I think, over the last month or so. And one of the things, we started to see this sort of rounded bottom. And then when the Walmart news came out, and when Walmart said that they might have to start raising prices, then you saw the basically response from the administration. And then you saw what Target said, basically the same thing, other than they weren't going to raise prices. But it all spoke to the same thing. And then I'm saying to myself, well, who's going to win in this situation? I said, you know what? The dollar stores, which have been so beaten up, they're going to catch a bid here. And that proved to be correct. And what I thought could happen, Dan, is we get back to that sort of line job to the downside that we saw back in August of last year, when the stock went from about 125 down to 83, I think, in literally a straight line. And, I think there's still a chance that we get back that move. And you can pull up a long, well, I guess that is the chart, but you can see what I'm looking at, that basically huge drop. So do we fill that gap? Do we get back to that level? Yeah, I think there's a chance. And this is something now, we've talked about it a few times on Market Call. And I think Carter Worth had a piece on this, I want to say 2 weeks ago as well. So as much as you're inclined to sort of take some money off the table here, I think there's some more room in these dollar stores.
Yeah. And on the flip side of that, and this week we're going to get, I know it's not like related, but it might be from a consumer standpoint. Lululemon's up 4.5% today, Guy. They're going to report Thursday after the close. And, just like we want to hear about a certain subset of the consumer, in this trade down story, as you just, kind of, outlined with the dollar stores, I want to hear what's going on here. You know what I'm saying? Because I think this will kind of speak to, our folks getting a bit more picky about discretionary items. And, like there's trade war stuff locked up in here. I would also mention, though, you had that gap higher. I think it's probably underperforming the discretionary index off of the lows. You see how far it is from the 52-week highs, but it's consolidated here. It's broken out of that range. It's holding its 200-day moving average. So we'll take a closer look on at that one. I just thought it's an interesting kind of narrative here, especially when you have the dollar store narrative changing a little bit.
Money on the sidelines, wall of worry. It really is.
Hey,
My type of day.
couple other things, guys.
Housekeeping.
Yeah. Danny Moses is sitting down
I know
with us.
Danny Moses.
You do. You do.
He sent me a text earlier that I won't reveal, but it got me.
I was
also
on
in my level of exorcising that got me exorcised.
Yeah. There was a couple things I just wanted to kind of refresh a little bit first. Danny Moses, yes, let me get done with that. He's sitting down with Peter Bookvar of Bleakley Advisors. That's going to drop tomorrow in the On the Tape feed. And by the way, if you don't follow Danny and On the Tape, go to your favorite podcast stores, follow it. He's doing a once a week drop. He's having great long form conversations with people like Peter. He's had a great group. He's had Vinny and Porter and his Big Short friends. He had Michael Lewis on a couple months ago. That was pretty fascinating. So go check it out. He also has.
How often does he drop? Once a week?
Once a week on Wednesdays.
He maybe should start thinking about like Mucinex or something, maybe a little more fiber in his diet.
Mucinex is the cold medicine guy.
Oh, what's the stuff? Maybe not Mucinex. You know what I'm talking about? Fiber, something.
Yeah.
You got to have the fiber.
Yeah, I do.
You should drop more than once a week is my point. I mean, on good days for me, it's 2 or 3
podcasts. So we are, well, it's not 2 or 3 drops. We usually record Risk Reversal Pod, and then we record the Market Call, and sometimes we'll do a third if we're preparing later on the week.
Right.
And it's less time.
Metamucil. Thank you, Timmy and Jacob.
All right.
By the way, Timmy's taking over the role of Amanda. He's like, come on, move on. It's really funny.
Yeah. One thing I just wanted to bring up, you and Carter were talking about the energy space yesterday, and we were talking about the moving crude, and here we are, we're approaching 65 or something like that, which is interesting because 65, 66 used to be that support level that we talked about. That was a good level to kind of get long and play for the mid to high 70s, and then it would get rejected. But energy stocks are having a pretty good day. OIH is up 4%. The XLE is up 1.5%. So that's a sector I know that you thought sooner or later it's going to break out of this long base that it's been. What did your high school girlfriend used to
Louise
say?
Yamada, the longer the base, the higher in outer space.
Correct. So we got that
tight ponytails there.
She's the best. You know what? We should get her back on.
Yeah, it's funny. She heard that we were talking about her, and she sent me a lovely email. I mean, she's just a really elegant, lovely person.
Yeah, and you know what was amazing about her is like she was hacking it out with a bunch of these male technicians, and she was
hacking it out.
She was better than she's. I got to tell you, in the history of technicians, I know her, and I know Katie Stockton. Female technicians. That's it. Which is amazing. Come on, ladies, get all up in that game because it's fun.
Well, there's another one, the one in Bloomberg.
The Chartress.
Yes. Can't think of her name.
I can't remember. She should come on Fast Money every once in a while.
Yeah, that's why I should know, but I can't anyway.
God, Guy, how many guests do you think that you have sat in front of on Fast?
Let's do them. I mean, hold on. Let's just sort of do the math. Sorry, Timmy.
19 years. If you make it to December.
They're 200. So there's 365 days in a year. So you back out weekends. So down about 250-ish. Then you back out holidays. So let's just say you have about 220 shows a year. 18.5 times. That's 4,070 shows, right? Ish. You figure maybe 3 guests or so a show ish, right? You're talking about, 12,000 guests. Obviously, a lot of them are repeats, but yeah, it's crazy.
A lot of repeats, but you've sat in front of Timmy just said, let's wrap.
Yeah, I see that.
But you're exactly right. It's generally 250 trading days a year, Guy. That's been the average since 1990 to 2000.
Walking in to shut you down in 3 minutes is great. We better get going. I mean, this is like a new regime here.
Tomorrow, guys, put in the chat. We did a little review of some of the mob movies over the last, call it 30 years or so. I'm really into the action movies, like the John Wick sort of genre. That's kind of my jam. We could do Westerns too, Guy. We could do documentaries would be fun. I know you love a good documentary.
Sure.
You're not so much into the sci-fi.
No, the sci-fi stuff is bullshit. Like all that,
Star Wars.
The space stuff, and it's like, please.
Yeah, and the last sci-fi movie you probably saw was Close Encounters of a Third Kind.
I saw that one. They built a big mountain in his dining room.
Yeah, Richard
That was
Dreyfuss.
Richard Dreyfuss.
Who else is in that movie? Richard Dreyfuss.
I think the woman that married Steven Spielberg, I want to say. But it's probably wrong.
Yeah.
Wasn't she the wife?
She might have been. Steven Spielberg met her on the set of the second Indiana Jones movie.
Sure.
Yeah. Kate Capshaw. Kate Capshaw.
There you go. Nice job.
Richard Dreyfuss. I mean, he was the voice. He was the narrator in Stand By Me.
Yeah. Richard Dreyfuss, I think, obviously, he's known for his role in Jaws.
Timmy just came to the door because we have these double glass doors because we're soundproof here. He gave me the creepiest look. All right. So on that note, Danny Moses, Peter Bookvar drops tomorrow morning in the Risk Reversal feed, actually on the tape feed. Go follow that. Look for that. You and I got a couple other really interesting interviews this week. So check us out. We'll see you here tomorrow, 11 a.m. Guy Adami. Bang.